Hey guys, welcome back to Laptop Trader channel on YouTube. My name is Philip. Again, I'll be hosting this presentation. This will be a follow-up to our monthly video from last week. My email contact is laptoptraderphil@gmail.com. And this video is for information only and should not be considered investing advice. Invest in yourself, then invest in the markets. What does it mean to protect yourself at all times? I'll just let you guys read through that. I'll wait for a few seconds if you want to take a screenshot. As far as our agenda goes this week, we're still in a news-driven market, and I think that's probably the normal. Now, I just have a few slides for you this week. Again, keep studying when markets are correcting or changing or transitioning. It's a great time to study the market. If you haven't looked at price action or technical analysis before, this is an excellent time to do some homework on how markets really work. But here's something I wanted to highlight for you guys. This was a trade that I took and I did some trade review on. This trade was taken in late December and was exited early January of this year. So I entered right here on this arrow pointing to this red monthly bar on a pullback, and I stopped out here in January as price undercut that December low. So I entered here, stopped out on this pullback, only to see the stock go higher, which was a fairly safe place to enter on the chart over this line in the sand, okay? So I didn't think I had really a bad entry, but the way I managed it was not very good. Another safe place to enter would have been right here above these two candles in November, December. That would have been another excellent place to enter this trade. So that's the context, right? This is the monthly chart. Let's look at the daily chart of where I messed up. So I entered at $124 on 12/22 last year after a large wide range bar on volume right here. See a large green wide range bar followed by this narrow bar where I entered on volume. Entered on the inside narrow bar. Next day, we had this topping tail with kind of a failed breakout, right? This did not follow through to the upside. It triggered, but left this topping tail, and then failed a few days later. Okay, so we had this failed breakout trade. First mistake I made was my stop should have clearly been directly under where I entered on the same day to minimize any loss. Instead, I exited over here as I was holding the loss at 117.97 on this wide range red bar after it gapped down. Okay. So this is poor trading. I had a fairly early entry, which wasn't the worst, but really where I messed up was I had this late exit. I should have exited right up here in this area. So well below a reasonable stop. I gave this one too much room to move down. I should have just stopped out, taken the loss, re-entered later on. After I exited or after I stopped here, the very next day, we get a green wide range bar reversal higher engulfed the previous day where I exited. And then we moved up into this square box or this consolidation base, okay? Now, if I had either held through this, where I exited, or I re-entered in this base or just over this base, I would have had a profitable trade as price eventually did move higher. So that's kind of one of my faults. I tend to enter a little bit too early, and sometimes I get caught in a bad position. So the real breakout happens right here, 9 days later after much tighter price action in this area. And I failed to re-enter due to fear. So I did not re-enter this trade and catch this move. This wide range green bar, this day right here where it actually closed. I had a closing breakout towards the end of the day, right? Price action closed near the highs versus back here where price action was kind of rejected with these topping tail candles. This wide range bar closing above this base should have erased any fear that this was going higher. Yet it didn't, and I failed to re-enter where I should have re-entered. So the other thing was I probably moved on and took some other trades and figured, well, we'll let this one cook for a while longer, but it did cook, right? It cooked right here for 9 days. So that was some mistakes that I had made with this trade using technical analysis. And what really happened financially, if we look at my spreadsheet, was that bottom line is based on $1.20 risk per share, I actually ended up having a minus $6 loss per share, minus $48 P&L, minus 5R when I should have had, oops, wrong one. When I should have had plus 10R, right? If I would have held through this and this moved up like it did, I would have had, even if I exited just right here, I would have had plus 10R. Instead, I had minus 5R. And that is just a way of measuring our risk and reward, okay? If you don't know what R value is, you can check out some of my other videos. I'm not going to cover that right now, but long story short, a winning trade became a losing trade due to my own management. So now let's get to this week's stock market review. Again, we just finally finished the full first week of April. We had this correction through time and then price in March, and now we flip back up. Okay, that's the context, and it's going to look the same as far as the NASDAQ goes, right? We had this correction through time and price, and now we're kind of flipping back up. Diamonds, similar story, and IWM, similar story on the monthly charts, right? Now, IWM never broke any moving averages, at least on the monthly chart. And the diamonds actually pulled back to this short-term 12-month moving average and then flipped up. Whereas the SPYs and the Qs, I believe this actually went below and closed below the moving average. I believe the Qs also, yeah, right here it closed below that moving average. And now it's flipped up. So I think maybe we've had enough time, right, time through this time period to correct. And now, you know, the news and the market outlook has become more positive going forward. And I think that's what the markets are looking at this time. As far as a market context goes, this is not a comment on political or economic activity. This is just a comment on technical analysis and how price and supply and demand are affecting this current market. So again, here's on a shorter time frame, on a daily time frame, where we can see this big sell-off. I think it was only 5 or 6% overall, but you know, we have this move up, sideways, move up into this little 3-day consolidation. And I think what's probably going to happen going forward is we may get another day up, but I think eventually this market is going to correct again through price and time like this, come down and probably at least test this area over the next week or two. And you'll probably see something similar in the NASDAQ, right? These are our two largest markets, NASDAQ and the S&P 500. And so very similar thing here. We may say this market move up again a little bit on Monday, but I think it's going to correct through price and time this way, and then we'll get the real move higher in these overall markets. So that's really my only comment at this time, is still be cautious. We still have some volatility, and we still have the potential for any future breaking news events that could affect the markets in a negative or a positive way. Here's what Gilead looks like today on a daily chart as far as when I was talking about that trade. Here's where I stopped out, and here's what this price consolidated here through this 9-day time period. Then the real breakout happened, and then this took off to the upside. Since that time, it's been correcting through price and time, right? We have this move down, sideways, move down, moved up a little bit, and it's been going sideways. This could probably retest these lows or just move up a little bit before Gilead gets going again. So this is still on my watch list. This is still on my radar. I'm expecting this to probably retest this low area, jiggle around here a little bit, and then maybe get a gap up or some sort of move higher in Gilead Sciences, because the monthly chart still looks pretty good. Okay, the longer term chart still looks, pretty good. We're still in a general uptrend, but this is probably going to take another week or two to correct along with the market before I would consider re-entering that trade. And let's see if I can give you guys one more possible idea for you guys as a bonus. I still like this company, BORR, Board Drilling. Had this correction through time and price here, moved up. It's been moving sideways here essentially over the last few months, where we have this kind of move up, red bar with a bottoming tail, and now this, so far in April, this kind of narrow range bar. I like this company over this red bar at over 625, closed Friday at 5.90. So I like BORR, Board Drilling, over 625. That's a possible trade idea going forward if that fits into your trading plan. If not, we're going to end that video here because I don't want to get too long-winded. And again, thanks for watching Laptop Trader. Thanks for contributing to the success of this channel. And thanks for sharing, liking, and subscribing. Next video will be the first week of May 2026. Bye.